Hi, today we're going to be talking about QuickBooks Online and how to write off bad debts and stale receivables. Basically, there are 5 steps that we're going to go through to help alleviate this problem. The first step is an administrative step, and we want to go up to the gear here, and we want to go to Your Company and Account and Settings. And in this box, we want to go down to Advanced, and I'm looking to go down underneath Automation, Turn Off, and I want to turn off the Apply the Credits. And the reason why I want to do that, I'll show you a little bit later on. It will help when we go to write off the bad debt or the stale receivable, as to the credit memo that we apply doesn't get automatically applied to a good receivable. So that's why that's important. And here's the Save button. And we're done. Now the next step is to go up to the gear, and it's up in the upper right-hand corner. And under Lists, we're going to go to the Chart of Accounts. And we're going to go over here and click this button, and we're going to go to New. Okay. And the type of account that we're going to set up is an expense account. And later on at the very end, we'll talk about which type of account we should be setting up. For right now, we're going to assume that this receivable that you're writing off is relatively current, relatively new. Okay. And then under Detail, we're going to pick Bad Debt. And then we're going to save and close. The third step is to set up what's called a new service. And again, we want to go to the gearbox. And in the gearbox, we want to pick under Lists, Product and Services. And then we want to pick New. And here we go down to Service and pick that. And we want to pick as a name, Bad Debt. And we like that. And under the account, income account, we want to choose Bad Debt. And there it is. And of course, then we want to go ahead and save and close. So now that is step 1, 2, and 3. Now we want to go ahead, and step 4 is to actually set up a credit memo. So if you'll go over here to this side panel on the left where it says New, where there's the sort of darkened side of the screen, then you can see down here we have what's called a credit memo. Now we want to pick the customer. Customer is Cookies by Kathy. And the amount was the product or service is Bad Debt, and it's $75. That was the amount of that receivable. And we were not subject to a tax. That when we billed to her for that work, for the work that we did not have to pay sales tax on it, so we unclicked that box. So now we have, and we have here a button called Save and Send, but what we really want to do is just save and close. And that now saves our credit memo. So we talked about that. If we hadn't taken the first step to remove this automatic application of the credit memo, and had there been another Cookies by Kathy receivable, and there is possibly, then that credit memo, here it is for $75, would have gone up against some other Kathy by Cookie receivable and not the one that we wanted. Now the next step is to actually apply that credit memo that's sitting right here against this receivable that we want to write off. And the way we do that is we go to New, and we go to Receive Payment. And we're going to pick Cookies by Kathy, which is great. And we have 2 things going on here. We have the invoice that's no longer good, and we have that credit memo, don't we? So we're happy about that. We've got our date in here, and it's time to go ahead and to save and close. And now you can see that the receivable by Cookies by Kathy and our credit memo have both disappeared. And that removed that stale or old uncollectible receivable. What I wanted to mention about is that receivable that we just wrote off was in the current year. If you have a lot of these receivables to write off, maybe they're 3 or 4 or 5 years old, you have two options. One, you could set up under, when we set up this chart of accounts, we put it under expense. You could actually set it up under a second category called other expense, which appears lower in the profit and loss statement, so that you can track separately these write-offs that are very, very old, 3 or 4 or 5 years old, versus just the regular bad debt expense, which was for the current year. The other option to do this is to actually, when we went to code where we're going to assign this bad debt expense, we could have put it to the retained earnings. That way, all of these old stale receivables were actually going to go to retained earnings, which is the holding account for the prior years and earlier years activity. And that way, it would keep it off of your current year's P&L, which is very important, because otherwise, your bad debt expense is going to be huge if you have a lot of these to write off, and it's really going to skew your P&L. And also, I wanted to mention that I have an outline of these steps in case I went a little quickly or I lost you. And you can go to our website at arthurlander.com, and we have a blog there, and I'll post these instructions on the website for your review. Do remember that we help people with bookkeeping, and if you do need any help, please contact us. Thank you, and have a great day. Bye-bye.